Good morning, traders. Manny Cabrera here from MDC Trading Academy with today's pre-market forecast for February the 9th. And let's quickly jump to our news items for this morning. We do begin at 10:30 crude inventories, and we're good till Thursday, of course, with CPI information, unemployment claims, and of course on Friday the prelim UOM. Let's look to our markets this morning as we begin finding the story. What is the underlying story of this market once again, as we find ourselves once again, friends, trying to recover from the drop that we had experienced here in late January. Market bouncing off this particular support level here, breaking above, finding about 200 SMA. We have not been able to go below 200 SMA. That's good news. And secondly, we finally have a market where we're actually seeing a market break once again, closed 2 days in a row. Right now, closed above the 20 SMA yesterday, and now it's another bar, it's above it. Volume is still steady at 1.5, but the ranges have definitely decreased, which is creating a lot of compression between really tight areas, which creates difficult trading environments, simply because there's really no areas for us to sit and wait. And this is an example of what I was teaching yesterday in one of my classes. If you have a tight range, if you have a wide range with volume, the runs seem to be obviously more predictable. They seem to have your runs and your retraces. Your trends seem to be, each oscillation, it's wider, therefore you get more opportunities for trades in particular key areas. When you have the same amount of volume, but yet you're dealing with compression, in other words, your areas of support and resistance are very tight. Obviously, in order to have the same amount of lateral movement, in order to move from here, let's say, to here, the market has to have a lot of more oscillations, and these oscillations tend not to hold in key positions. That's why we're experiencing this kind of difficult, kind of choppy market that we find difficult to find key areas to enter. So keep your eyes open for that early in this morning. Let's see what we have here at a larger time frame, another smaller time frame, but yet a little bit compressed. We can see market finally breaking above this particular resistance level. Above, once again, we were there before, but we were there pretty briefly before we did this almost entire oscillation down. Now we find ourselves once again trying to go into this channel. We'll see how long we stay here. Let's see what we're looking at in reference to trading this morning's activity. As we go to our analysis chart, we can clearly see we're clearly above yesterday intraday high, which was established late in the afternoon yesterday. After this particular support level was formed, the market jumps, creates the high, the intraday high, and we've had higher highs and higher lows primarily the rest of the day. Here is a clear support and resistance area. This is our north-south line right here. This is our first north and south line. As long as we remain above this line, we're expecting to buy dips to go long. Any break below this line here, our next set of areas for support will be the intraday high. And of course, any break above there, we're potentially looking at maybe moving a little low. Let's just do a quick fib for this run here from this bottom here till our current high. And as you can see, the market can break below the SMA, even lower, a little lower to the 61, and still be considered just a retracement for more continuation. Now, like I said, this is our north-south line here, this trend line here. So as we remain there, we're just buying dips. Take care. Have a great session. Let me know if you have any questions.